Hey guys, what's up? PipSnipers here, back for another update. Let's take a look at Kava over here. And we currently see a falling wedge pattern. And something that really caught my eye on Kava here is that we went down by over 96.3%. This is actually, 96.53% from the peak down to the trough. And what I've noticed here is this is a very similar setup to that of Casper. When we take a look at Casper over here, it's the exact same thing. We had this accumulation range for 643 days, and you can see that every single time we tried to break out, there was a knockback down, right? Like there was a concerted effort to keep the price down and keep it from escaping these highs. There's a lot of liquidity resting over here, sitting at 0.053 on Casper. So at the top of this range, composite operator drives the price down, max supply enters into the market, and you have this push back, you have this advance back up to the range as resistance for your initial advance, and then your throwback down to extremes. And you actually have market participants more scared here than they were here, because they're thinking that, oh damn, it's gonna go back below these lows, might as well sell over here. But this was just a test. You could say that this is a test after your spring before we have continuation. And you can see that the only difference between Casper and Kava is that Casper had a 76% deviation from that range, but Kava actually has a little bit more history from 2020, right? And it's gone down by over 96%, but we have a little bit of a smaller deviation. This is about 54% down deviation below this range right here. Okay. So yeah, these would be the breakout targets. Right now, Kava, it's turning down a little bit. So it may just consolidate here, right? Okay, so something like this. It's going to form a base around here, which would allow for expansion to the upside. Okay, so we just need to form this base here on Kava, and then we'd be taking a look at 253, 341, and 395. The reason I'm placing the fib this way is because you want to take a fib from the drop-off point down to the trough. Okay, and it's a very important high because let me just find this thing here. It's a very important high because we went down by 78% in the span of 156 days. So that's why it's such a very important place. That's why I place importance on putting the fib there specifically. And then when we take a look at the weekly time frame, we're just consolidating under the 200-day. So this is the 200-day moving average. Okay, so it's crucial that we reclaim that 200-day at 0.4551, and then we'd be taking a look at the major fibs to see how everything lines up. Okay, so this would be your TP1, 150 to 166. TP2 would be 231 to 253. And TP3 would be 313. And then you have these interim targets in between. And then 426. You can kind of save this area as your moon bag. And then what we can also do is see if there's any inefficiencies above. We'll first go on the monthly here. So there's this monthly inefficiency right here. So you'd always want to be targeting. You'd always want to prioritize inefficiencies that are higher rather than lower. So let's say there's inefficiencies down here. When you're swing trading, you'd want to be targeting the highest one because it's more likely to go there. So you see how much confluence we have here at this 702.786. So now we have price-based capitulation, and then we also have time-based capitulation. Remember, we've gone down already by over 96%. That's why this could be a gem. Let me see here. This is almost 1900 days of accumulation. So we'll see. Invalidation would be to go below 0.318. And in that case, if we were to do that, it would just come down like this and then pop up from there. Because don't forget that this is a falling wedge pattern. Hope you guys enjoyed the video. If you guys have any questions, please feel free to let me know. Peace out. Take it easy. See you.